make sure we're comfortable with some of the tools. I'm going to start with a polling question real quick. The polling question that I've got is, have you participated in one of these earnings call labs before? So let me open up the poll. You should see a poll there. All you have to do is go ahead and select it and then hit submit. Yes, I've actually participated in one of these before, or this is my first time. No, I've attended one earlier this year, or no, it was last year that I had a chance to attend one of these. That we hold these every single month as a way to help those that have participated in our courses here at Acumen Learning to continue to build their business acumen beyond the course. We also open up for anybody as a way to help you practice listening and understanding that your customers, your companies, what are our executives talking about? What are the focus from a strategic perspective, and what can I do? Now make sure as you select that poll, you got to hit submit for it to actually calculate. So make sure you hit submit, otherwise it won't calculate it for us. As I look at that, it looks like 43% of you, it's the first time you've been here. About 57% you've come back, so welcome back. These earnings calls happen on a quarterly basis for most publicly traded companies. A great way to understand, if you're in a publicly traded company, what your executives are talking about, why it's important, and how you can impact it. If you're somebody who maybe is selling into publicly traded companies, this is a great resource to help you understand your customers. In addition to that, it's also a great resource from an investment perspective to understand what's going on in the companies that you're investing. Well, we'll be using the poll throughout today. The other thing that I'm going to be using is the chat box. So make sure you have that open and make sure that it is set to everyone. If you don't see everyone, it may just say all attendees. But here's what I want to do. Just open up your chat box. Let's make sure we're comfortable using that. And here's my question for you. Where are you calling in from? It could be a city, could be a state, could be a country, maybe a location in your home, as many of us are working from home. I'm calling just south of Salt Lake City, Utah, where today we got about a foot of snow. So anybody coming out to Utah for the holiday, we got some good snow coming in. So hopefully that's a benefit for those that are skiers out there. We suggest we have the best snow on earth. I don't know how Colorado sees that. Also don't know maybe how the Swiss Alps, European countries, different areas. But boy, we got some great snow today, so should be some good skiing. Well, folks, it looks like we're comfortable using that. We got some people. Let's see. Just a quick review. Got a lot of people in the United States. Any international? Oh, London. Thank you, Donna. Welcome. I guess probably late afternoonish for you, maybe early evening. Welcome, welcome. Good to have you here. It's snowy in Utah. That's right, Ron. A lot of snow here. Well, welcome back, and welcome for those that are new to this program. Well, as we get going, let me go ahead and jump back to my slide deck, and let's kind of walk through what we're going to do today. So earnings call, we're going to focus on how to listen to these earnings calls, how to make sense of them, how to use them within my role. The first question that I have with you, you're coming to a what the CEO needs you to know, how to listen to earnings calls, and my poll question is this: when was the last time you listened to an earnings call? Boy, I listened to something this year. I listened to something last year. It's been a while. You know what, Brent? I've never had a chance to it. And for some of us, boy, I'd rather go to the dentist than actually listen to these earnings calls. As I described earlier, these happen on a quarterly basis. They're usually somewhere between about 40 minutes long, all the way to an hour and a half long. Most of them sit right about that 50 to 60 minutes where you'll see most of those. The purpose of these calls is a chance for executives to communicate to the market their financial performance. They describe kind of where they're currently at, where they want to go, and how they're going to get there. This is a chance for them to articulate not just the financial performance, but their strategic direction. Of course, Verizon has been through an interesting couple of years. 2020 was a tough year for telecommunication. And to see what's happened past that, what's happening in 2021 and beyond is kind of an interesting story as we get a chance to look at them today. These calls are a great way for you to understand your company, to understand your customer, or understand those that you're looking to invest in. So we look at the group today. Looks like most of you, awesome, 63% of you have actually listened to the call, or have listened to a call this year. Last year, and boy, it's been a while, Majority of them had a chance to do that. That's wonderful. Now, there's a small percentage, about 11%, who've never had a chance to listen to an earnings call. I hope today that I inspire you enough to say, you know what, I'm going to give this a try. I'm going to take the time to go listen to my companies if I'm a publicly traded. I want to listen to one of my customers if I'm in a sales role. I'm going to look at my competition. Or maybe I'm just interested for my personal benefit as I look at the companies I invest with. My hope and goal is to give you a process and a tool that will help you to do that. Well, as you look at these earnings calls, as we jump in to our discussion today, these earnings calls happen on every quarter of every year. And yet this statistic stands out to me. 95% of employees don't understand their company strategy in these publicly traded companies. 90% don't understand their company's important business metrics. As you think about your company or the organization, do you agree, disagree? What would you think? Yeah, I see that, or no, that seems high, that seems low. As you think about, let me get my screen back up there. These are some interesting stats, even with that information available. In fact, there's another data point I don't have in this slide deck. Only about 25% of employees actually listen to their own earnings calls. Well, imagine you're the CEO of one of these large organizations. You've got a strategic direction you're trying to move forward. Imagine you're Hans Vestberg, the CEO of Verizon Communication. You got a major brand in a very competitive telecommunications space. You're a key player there. 132,000 employees. The market's changing. You know, it used to be, you go back to into like 2007, 8, 9, 10, maybe up until 12, you had certain differentiations, right? AT&T was the first one to have the iPhone. So many of you moved to AT&T so you could get access to that. Remember, originally, the only person here in the United States that had the iPhone was AT&T. Verizon was known for their network, the power of it. I'm from Idaho. Like if you're in the backwoods of Idaho, you wanted to have a Verizon cell phone. If something went bad, you wanted to be in the best position to access a network. You had T-Mobile, which was kind of that low price option that you could look at, Sprint and others. Of course, today, the market's adapting. Customer behavior is changing. Then you throw in COVID and what happened there. Interesting facts, like for example, during COVID, they lost about $200 million in revenue just by people not traveling. You think of us, for those of us that travel, you have roaming costs. You also have international passes. There's a lot of challenges that they dealt with in 2020. Of course, then they bought some assets a number of years ago, AOL, Yahoo, some media groups, etc. And then they decided to make a divestment. They just sold them off in September of this year. How do I get my employees to understand what we're trying to do, what we're driving toward? What are the 2 or 3 key strategies or metrics that they should be focused on? And how do I help them work towards that? How do I communicate to the market and get them on board? In the end, that's what these calls are all about. It's you think about Mr. Vestberg, what does he want his employees to understand about their business, their strategy, their metrics? What about their customers? How can I make a case for customers where they want to maybe pay a premium because of the value add that Verizon can provide? What about the shareholders? What's the message I want to give to them as we see our cash position, a lot of cash going out to build out 5G, mobile cities, all the different investments they're doing, and what's the return they're going to eventually get on those? Of course, then their partners, all those that resell Verizon Communications, the Diamonds of the world, etc. How do I get them on the same page? Well, folks, that's what this earnings call is about. These earnings calls are a chance for a CEO and their executive team to communicate where they're currently at, where they want to go, and how they're going to get there. As you think about this process, I'm going to walk you through a simple tool and with a simple process. This tool, my guarantee to you is this: if you choose to participate in your earnings calls of your own customers, of your company, or any company you may want to look at, once you do about 2 to 3 of them consecutively, you'll get this information. We do this here at Acumen Learning. We focus purely on the topic of business and financial acumen. Our goal is to help employees understand how their companies make money, how decisions are made around the money-making process, but most importantly, what can I do as an individual to impact that process? We also help sales organizations understand their customer and how do I become that trusted partner. My guarantee is you do 2 to 3 of these consecutive, you'll begin to change the way you think about your business. My guarantee is this: you'll build your credibility, you'll build your career, and you'll build your company by understanding what your organization. What we find working with 30 of the Fortune 50, many of the Fortune 500, doing about 1,000 different trainings a year around this topic of business and financial acumen, we find that the senior leaders in these organizations are doing everything they can to squeeze out all the financial statements, create greater profitability, greater cash flow. But you think about it, who really impacts the business in these large organizations? It's you, it's your colleagues, it's your peers, it's competition, it's partners. What we find as we go into these businesses is that employees are functionally brilliant. You know more about your role than I will ever understand about your role. Yet we tend to kind of go through our careers with kind of blinders on. I might be in an operations role, so I'm very focused on my operational metrics and measures. I may be in a sales role. I'm very focused on my individual customer and the things I want to sell them. Well, what this tool allows you to do, and what our courses allow you to do, is to step back for a moment, get the big picture perspective, and then with your functional expertise, help your organization make the right decisions at the right time with the right execution. Listening to these earnings calls help you to get to that. So again, my guarantee to you is this: if you'll take this tool that I'm going to share with you today and use it the next 2 to 3 quarters, I guarantee that you'll build your credibility, you'll build your career, and you'll have a positive growth and impact to your company. Well, that being said, let me walk you through the process. What I'm going to do is I'm going to walk you through the process. I'm going to walk you through the tool. And then the goal is to then provide that for you to go look at your organization or your company, your customers, et cetera, you want to look at. So the process consists of 3 parts. Number 1, you got to prepare. Number 2, you got to analyze. And 3rd, you got to apply. Not rocket science here, but let's start with the preparation. On page 2 of this tool that you'll have available at the end of the course, it's going to walk you through 3 things that you can do. But before it does it, it gives you a little overview how to think about these earnings calls. What we call earnings calls 101. What is earnings calls? As I said, they're about 45 to 60-minute calls typically, where a chance for the executives to communicate to the market and analysts to ask questions. The first part is what they call the prepared remarks. The prepared remarks consist somewhere between 15 to 35 minutes, where executives get a chance to kind of share their communication. This is where we're at. This is where we want to go. If there's any gap, why did we have a gap and what we do to overcome that, and kind of where we headed in the future. At the end of that period of time, analysts who work with these large investment firms get a chance to ask clarifying questions. Ask, what's going on with the 5G rollout? How soon will that be into service and you'll start to generate revenue? They ask questions around, what are you going to do with that extra cash? When is that going to start coming back to investors? That's their chance to kind of clarify what's going on in the organization. Again, they happen for about somewhere around an hour period of time. So as you go to these earnings calls, what do I need to do when I go to prepare for them? Number 1, you got to locate the call or transcript. What I want to do is I want to walk you through the process to do this, okay? To be able to access, I hit the wrong button there. Let me go ahead and share my screen here again. Here's what you're going to do. There's this great website we're all familiar with. It's called Google. You jump to Google and any company you may want to look at, you do a quick search and it'll give you access. So for this one, I want Verizon. So I type in Verizon. I want Q3, that's the most recent call, earnings call, as it says right there. And you notice it starts to guess. I got earnings call 2021. I got earnings call transcript. I can even put earnings call webcast. It's a very common phrase that they use. So I do my search, and I'm going to look for all sorts of stuff. Now, you'll notice it came first with Verizon. I like to find those the Verizon focused ones. I'm looking for their investor websites. That's ideal. You'll often see other companies. Actually, Verizon's kind of, here you go, Motley Fool. This is a third-party organization that can give you information as well. But as I said, I like to kind of start by going directly to the source. I go to their organization itself. So I see here Q3 earnings call webcast. I click on that, and I'm to the page. It took me right there. Now, what do I have available? If it's pre-call, all I'd have is this link to the webcast. If I click on that link, it actually gives me a chance I can register to the call. So if it's prior to the call, we're ending here in about 2 weeks. We'll end calendar year 2021 for any company who their fiscal year is calendar year. So here in January, they're going to start having these calls. Usually about the third week in January, they'll start to see them, and they'll go all the way through February. If it's your company and it's pre-call, I just go there, click on it, register. Sometimes they'll even give me a calendar invite, so I'm ready to go. Now, once the call actually happens, then they give you additional information. That's what you see here. If I click right here, I'm going to actually get access to that earning. Oh, here's the registration page. I haven't registered here, but I register and it'll give me the recording of it. They actually have a link to the audio. I can actually listen to it. I hit play right there and it's actually playing for me. So that's an option. I always want to get access to the transcript. This is a great resource. This transcript gives you word for word what your executives are said. So here you go. Here was who was on the call. You got Brady Connor, Verizon Senior VP of Investor Relations, Hans Vestberg, their CEO, Matt Ellis, their CFO. And here's all the analysts that were on there as well. So in the end, as I go there, here's what I want to access. I want to either listen to the call or access a transcript. Here at Verizon, the transcript's right there. Now, from time to time, they won't have a transcript. If you do that same search in Google, ask for the transcript, it'll take you to Motley Fool, it'll take you to Seeking Alpha. These are great additional resources where they actually will type it up for you and create a document, a transcript for you. The last thing I always try and look for is right here, the actual presentation that they presented. This presentation gives a tremendous amount of data points. It's a great little summary of what they're trying to articulate. So I always look for that as well. The last thing you want to look for or get access to is going to be their financial statements. I click right here, and I'm going to get their financials as well. So again, if you want to keep in your notes, what do you look for? I want to get access to that webcast, either listen to it or get a transcript for it. Number two, if they have a slide deck, I want to see that. I want to see that presentation. What are they looking at? And then the third thing I would say is make sure you access their financial information. Okay? Folks, that's how you access it. Let me jump back to our slide deck. So now that you've accessed it, again, pre-call, you're going to register to listen for it. If it's post-call, I want to access the transcript. Prior to the call, you want to review your notes from the prior call. Now, of course, if this is your first time doing it, you won't have a bunch of notes. But the idea is, as you do this multiple times, you'll begin to create information that every quarter you can come back to. Okay, I listened to Q2. Here's my document I filled out. What were their key strategies? What were their financial performance? I do a quick review. Now I'm ready to listen to the call, see what's changed. If that's not the case, you can always go back, like I said, to the website, and I can actually go to multiple quarters. If I want to get Q2 information right here, I got Q2. If I want to get Q1, I can actually change this and go to 2020 and access information. So again, there's multiple ways to access this. And honestly, guys, I think this is kind of a hidden gem for many people. We know that they have these calls, but we don't know the information that's available. So getting access to it, again, a simple Google search, name of the company, what quarter you want, and type in earnings call, transcript, earnings call, webcast, any of that, and you'll get access to what's going on. The last thing you want to do in your preparation phase is to get with a group. My recommendation is you'll get more out of this as you do it with multiple people. One of the programs we do for our clients is called How to Listen to an Earnings Call. It's part of our new program called Applying Business Acumen. How do I take the information that I got in my building business acumen and how do I use it in my day-to-day activity? Well, in Applying Business Acumen, one of the things we have them do is they actually go through a call with colleagues on the phone. It's a great way for you to kind of learn from each other. Hey, here's what I heard them talking about. Here's the key messages that I think about. Because the last part of it is, okay, based upon that, what is it you're going to do within your role? So getting with a team is a great way to walk through these calls. Folks, that is the prepare phase. Pretty simple. Got to access it, review your prior notes, and then get with the team as you go and review that together is our recommendation. Well, the meat of the tool that I'm going to give you is the analyze phase, and I want to give you a simple framework. For those that have gone through a course, make sure you have your chat box open. I want you to help me fill this out. I'm going to walk you through a simple framework. Anybody who's been through our program, this framework will look familiar. If you're not, no worries. At the end of this course, we're going to give you access to an online learning self-paced program. We're going to give you a significant discount where you can get a high-level overview about these 5 drivers. Here at Acumen Learning, this is kind of a simple framework we use with all of our programs. It helps employees understand how to think about their business, talk about their business, and execute around the business. This 5-driver model becomes a great resource as you listen to these earnings calls. So I want to walk through it real quick. Get your chat box open if you don't mind, and help me fill this out. All of you that are graduates of our program, I've got some questions for you. We talk about cash in business as being one of the core drivers every company focuses on. Fill in the blank for me. Cash is blank. What would you put in that blank? Do you think about business, cash is? Chris says king. We can say queen as well. Sometimes we'll say lifeblood. Cash is absolutely vitally important in companies. The challenge with this one is you often don't hear companies talk a lot about their cash unless they're struggling with cash. We don't wake up in the morning, for example, and say, hey, I want to generate more cash today. We may say, hey, I want to generate more revenue or profitability for my company. But cash is kind of the outcome of what the organization does. But cash is the lifeblood of the business. You have to have cash to drive your business. You have to have cash to pay your employees, your suppliers, be able to market and expand your business. So cash is vitally important. 2 key metrics we look at in cash is one, which we call cash and cash equivalents. Represents kind of the cash on hand. It's kind of, think of it kind of like a savings account. The other cash we talked about was cash flow. The difference between the cash that comes into a business minus the cash that goes out from running your business from its core operation. Now, by way of reminder, the cash that's kind of in our savings account, what do you think investors want us to do with that? Do they want us to increase that year over year, the cash that's sitting in our savings account as a publicly traded company? Do they want that to decrease, or does it kind of depend upon the business or their strategy? What would you say? Do you think about the cash that's on hand? Investors want you just to hold on to that? What do they want that to do? Caleb says it depends. Anybody else? Yeah, they want us to invest it. Yeah, it kind of depends upon your strategy. This will go up or down based upon strategy. You're going to see Verizon had $22 billion of cash at the end of 2020. When we go and look at it, I want you to find out where's their cash today. You're going to see they significantly spent extra cash. Is that a good thing? Is that a bad thing? How do you think about it? Now, of course, investors don't want it to keep going up. Why do investors not want your cash just to keep going up? If it's just sitting in your savings account, why do investors not like that? Put in the chat box. You're an investor. Yeah, Caleb says they want it. Absolutely. They want it. No growth in the company, and as well, I want some dividends. I want you to buy back some shares, etc. So cash and cash equivalent will go kind of up or down. It's all based upon strategy. Versus cash flow, on the other hand, the difference between the cash that the company generates from its core business minus the cash that goes out to run its core business, what do you think investors want that to do? The cash flow of company, is that up? Is that down, the cash they generate, or does it kind of depend? What do you think? Every month, quarter, a year, what do they want their cash that they generate to do? Ron Safel saying it goes up, up, up. Anybody else? The cash that they generate. Oh, great question on the 3 reasons for a buyback. One is, why do they do a buyback? Triggers in the market that their stock is undervalued. So the idea of a company buying back, you should get more attention to the stock. Each individual stock represents a greater value as you reduce the number of shares. It also increases your earnings per share, which is a key metric that suggests the future potential of your stock growth. So it's a way to get value back to your investors without any sort of tax obligation as well. Let me know if that answers your question. But yes, they want the cash flow to go up, up, up every month, every quarter, every year. Excellent. If I want to look at what's going on in my cash, I'm going to look at this statement right here, cash flow. Well, let's talk about profitability. There were 2 levers. There was 2 levers that impact profitability. What's increasing one thing and or decreasing something else. Do you remember what those were? If you wanted to grow profitability in your business, what could you increase and or what could you decrease to increase profitability? Virginia says decrease our costs. Yep, that's that one right there. Reducing our costs. Anybody ever heard an executive talk about reduced costs? In fact, Verizon had a $10 billion cost reduction initiative. They were at $9.5 billion at end of Q3. They expect to complete it by year end. Real strong performance. What else could I reduce that? Yes, increase my revenue, also known as increasing my sales. So those are the 2 levers we have. Now, different types of profitability. You have your gross profit, where you take your direct cost out. Take operating profit, sometimes referred to as, I can put in the chat box, EBIT. I'll give you extra credit points if you can tell me what EBIT stands for. Sometimes they'll even call another form of profit is EBITDA, another type of that. Of course, then we have net profit is that bottom line. Profitability, the statement I would want to look at from a profitability perspective is going to be my income statement. What's going on from a profitability? That's exactly what I'm looking at. Looks like Donald Fry got it right. Earnings before interest and taxes. Interest on our debt and taxes. There you go. That is correct. Jason, good job there. Okay, so this is one you hear a lot about. You hear people talk about it quite a bit. It's definitely a key metric of Verizon. They use EBITDA as a key metric for them. Of course, then assets. Assets represents anything you own or control which has value. As you think about Verizon, what do you think they own or control which has value? What comes to mind? Put in the chat box. What might be on their balance sheet? Things they own or control which has value. By the way, any of you in the telecommunication, they just invested $47 billion. Huge investment in something that's vitally important in the telecommunication space. Anybody happen to remember what that might be? Of course, cell towers could be part of that, the network that they develop, everything. Landlines, you think about FiOS, vehicles. Yeah, there's a lot of stuff. Spectrum, there you go. Spectrum is the big investment. $47 billion in Spectrum licenses they purchased this year. Huge investment. Of course, if you want to see what's going on from an asset perspective, both the asset strength, how financially strong is the company versus how they're deploying those assets, you look at the balance sheet. Of course, growth is what investors expect. People are the core of any business. Both that external customer, internal customer is what you're focusing on. So with that quick review, let me go ahead and jump into the tool. The first tool is called the Executive Alignment Tool. This is the tool you use to help you get to the strategic focus of the business. As you look at it, let me explain how it works. As you're listening to the call or you're reading the transcript, every time I hear something about cash, I put a little slash mark. Every time I see something about profitability, I put a little slash mark. Assets, growth, and people. I can do it right here as well. At the end of that call, you'll have a number of slash marks, and all you do is you're going to come answer these 4 questions. Now, don't worry. If you're new at this, you might say, Brent, I haven't even gone through one of your programs. Don't worry. Right here, I give you a little definition, what we mean by cash. Not only that, I give you what I call, for those of you who've been on this course before, these are our trigger words. These are the words, if I hear them, I know they're talking about. If I hear them talking about dividends or distribution, I'm absolutely thinking cash. Talking stock buybacks, I'm thinking cash. Debt, cash. I hear those metrics, I know we're talking cash there. So you have both the definition as well as the examples. Once you go through that initial analysis, here's the 4 questions you're going to answer. Number 1, which business driver seems to get the most attention? I love the second part of that. Why? What's going on in their business? What's the macroeconomic factors? What's competition doing? Why are they talking about it at this end? Why would they be talking about cash as they come out of COVID, for example? Second, what were the 2 or 3 main points the executive was trying to make? Third, what's the goals, trends, objectives as they look to move forward in the business? And then because it's an earnings call, the last question, I want to know, what are the analysts asking? What are they really questioning around? Really helps me to get clear where they're challenging them. Where's the market saying, yeah, I agree with you? And where's the market saying, hey, I have questions around this? Once you're done with this, you might even go and check how their financial performance. Look at what the market is saying. What are analysts? Are they bullish on the opportunity? Are they neutral? Or are they concerned about it? That's a great way to assess their strategic focus. So we don't have time to go through the whole thing as we only have about 30 minutes left. But here's what I want to do. I got a few quotes, and I want you in the chat box. Here's what I want you to do. Tell me which of the 5 drivers, you see on the right-hand side, the 5 drivers, which of the 5 drivers seem to be standing out in the communication from their executives. So this is Hans, their CEO. And let's talk about the first sentence. We had a solid performance in the 3rd quarter, growing total wireless service revenue by 3.9% year over year with earnings growth. In the chat box, which of the 5 drivers is Han talking about? Yeah, absolutely. Growth is going to be there. Cash could, because the outcome of higher revenue, if you can collect it, eventually could be cash. But absolutely, growth is there. Of course, I'm talking about revenue, which is one lever on your profitability. So I might add profitability as one as well, but definitely growth for sure. Let's see the next sentence. What do we see there? This was supported by strong net additions in wireless and broadband, which are both translated in bottom line growth. Okay, so of course you got growth. Yeah, but assets, there you go. Wireless assets, broadband assets, net adds. You could make a case for adds think about ads as new technologies or new customers. It could also even start to get into people a little bit. Now, one of the things you notice is it's not an exact science, meaning some of you saw asset very clearly, some of you saw growth, some of you saw growth in assets, some of you saw growth in profitability. We do about 1,000 of these sessions a year, and invariably, this tool, this process, the top 2 or 3 drivers will rise to the top with everybody. So it's giving you a basic way to think about where they focus. They seem to be talking about a lot about growth, a lot about assets, a lot about profitability. Okay, why might they be doing that would be the next part. Well, let me wrap this one up. As I said, through the year, we have all the assets. Boy, when it says the word, that's kind of neat. We need to extend our #1 position in the market. So definitely assets is going to play a role in that. Next, our strategy remains unchanged, and we're delivering on everything we promised, and we're gaining momentum on all 5 vectors of growth. Let's wrap this one up. Which driver you see there? Absolutely, assets growth. And now we've only read one quote. These drivers that you're looking at, when I show you it completed, you're going to see that they're the top 3. Those 3 that you're seeing there, the top 3 that they've been talking about. Okay, I'm not going to read it this time. I got another one. So here's one from Matt Ellis, their CFO. What is he talking about? Kind of scan through it, put in the chat box. What are you seeing there? Ranjita, we'll talk about the 5 vectors in a moment. Great question. So profitability we're seeing. Growth, of course. Again, I see the word growth. I know that's there. I think this is interesting. This actually gets to one of their key messages. I'm going to go ahead and read it. As we've said previously, our focus is not solely on volume growth, not just new ads as a goal in itself, but in high value volume growth. That will yield sustainable increases in revenue. You got profit, and right there it says profitability. So profit's going to be there. Anyway, so this is a key message. I'll talk about that a little bit later. You know, you got some assets in there. They talk about Disney Plus as an add-on that they're providing for customers to kind of differentiate them, etc. Let me do one. Not only can you look at the executive communication, but here's one of the analysts, Simon Flannery from Morgan Stanley. What driver is he looking at? Put in the chat box. What driver do you see as you read the analyst questioning for them? Thanks so much for the disclosure on fixed wireless. That's great to see. Perhaps you could just give us a little bit more color on the economics of your product. Is this similar to ARPU? ARPU, if you're not familiar, average revenue per user. It's a key metric in telecommunication. They take all the revenue per user, and what's the average revenue per user to a smartphone? He's trying to get, as we do this fixed wireless, it's in these big cities, right? Faster speed, you get access to fixed wireless. The idea is, what's the economics of it? Is it the same as kind of a smartphone? Or is it higher? Is it lower? Trying to get at how much revenue you're going to be able to generate from this new offering you have. So definitely, yeah, profitability, assets are going to be in there for sure. They talk about growth. It's all these, they're expanding coverage. 100 million covered points of, what is it? Points of, help me out with that. I think it's points of, it's basically the area they're covering. Points of, I forget what the last piece, somebody put it in there. I know I've got some Verizon people on the phone. Well, folks, that's how you use this tool. It's a simple way to kind of take the 5 drivers. What are they talking about? Boy, they're talking a lot about cash, profit, assets, growth, or people. Well, we don't have time to go through the whole thing, so here it is. I did it for you. And look, the ones that we were talking about, growth, assets, very high. You got profitability pretty good, but also people. A lot of that people are around customers as you look at the analyst questions. So let me kind of walk you through the tool. Again, we don't have time to go through it, but I filled it out for you. So let me answer those questions. The first question is, which drivers seem to get the most attention? We saw that earlier. It's this one right here, right? It's going to be growth as number 1. So why? Why might growth be number 1? Well, big factors, the whole industry was down in 2020. You look at AT&T, you look at the competitors, and it was a tougher year. Their normal net ads had dropped off. As you think about it, everything kind of slowed down. The whole economy slowed down a little bit. So people weren't going out and doing as much as they used to do. You didn't get as much roaming fees. You didn't get all these other things that they were doing. So it was kind of coming out of it. Why is growth so important? It's kind of like, hey, we've come out of this. We want to speak to all the exciting opportunities. But there's another side of it of all the investment they're doing. So one of the things why is growth focused? It confirms their strategy is working. Our strategy remains unchanged, as we said earlier. And we're delivering on everything we promised. And we're gaining momentum in all 5 vectors of growth. Now, this answers that question Rajetna was asking, I think. Here's their 5 areas of growth. Network as a service is overarching, but number 1, it's 5G adopting, those faster speeds. I had a colleague of mine in New York City in Madison Square Garden getting like 800, 900 megabytes of speed, significant speed enhancement. Of course, how do we monetize the network? Basically building on resources, add-ons or whatever that allows us to generate more revenue. One of the biggest ones was their Fios. Those of us who've been around Fios for a number of years, Fios kind of got stagnant for a while. Now it's ramping up tremendously. Next gen B2B applications, they're looking at some software as a service opportunities for their customers, being able to use these faster speed networks to get what they call machine MEC. I forget the term. Somebody put in the chat. Oh, yeah, points of presence. Thanks, Virginia. Tell me what MEC was. Mobile edge compute. Thanks, Chris. This idea of being able to get information immediately, right? I'm on a truck and I can automatically get the data and analysis, kind of real-time information is a great B2B application. Oops, sorry. Let me go back. Customer differentiation. Their big differentiation with their customers is the strength of their network and the ability to get faster speeds and get to these higher tier options. Of course, new markets, they're looking to acquire it's not telephone, it's telecom. What is it? I've got it somewhere here in my notes. It's one of their investments. It's actually a third party. There you go, TracFone. Thank you. TracFone is a big investment that they're doing. It's kind of a prepaid option, kind of an economy level option for them, kind of a unique play that they're going after. But new markets as they divest their media assets and they're going after TracFone and some others. Multiple paths to revenue growth is kind of their big focus here. On the contrary, selling off media assets lets them focus on strategy. Absolutely, Chris. This idea of divesting that asset really helps them, and that's their message, that they're really focused on their network, on a consumer side, a business side, and providing kind of that 5G adoption, network monetization, next-gen B2B application, customer differentiation, and new markets is what they're looking at. So that's a key part of why growth. That's a focus of what they're doing. They're investing a ton of money is another one. We have more paths to growth than anyone else is their comment, right? We are confident with our growth targets. We're updating their financial guidance. In fact, they did that. That's a big message. Market loves to see this. Here's our prior guidance of where the growth numbers would be, where their earnings per share would be. And then, of course, you've got right here, they're updated. Based upon where we're at, 3 quarters in, we're able to increase our guidance, which is really a positive message to the market. Absolutely, Caleb. There's a little bit of this. Let's get back to that core. In fact, they even describe their core business around kind of the 5G, Fios, C-band, all the faster speeds, mobile cities, et cetera, that they're focused on. Of course, one of the reasons they're talking about growth is because they're expanding their infrastructure, both with Fios, fixed wireless access. They continue to expand that. I'm really excited for that. I'm seeing some real wins on that. Imagine a day where you don't have to have wirelines coming in. Basically, you're able to access everything wirelessly. It's kind of an interesting option. And of course, they had growth in their subscribers of Fios. That's a big one for them. And then this is 11 million fixed wireless. They just rolled that out this year. And so they're already at 11.6 million have access to that. Growth in Q3 consolidated financials. Of course, their revenue's up year over year. EBITDA's up, as well as earnings per share. So a lot around growth that they kind of described. The last one I just highlighted at a very low level was their next highest one, which is assets. Tremendous build-outs around 5G, C-band, Fios, spectrum purchases, mobility cities. I mean, they are really investing a lot of dollars. And when you look at their financials a little bit later, you'll see they went from $22 billion of cash on hand down to about $10 billion. That also includes about $700 million that was a gain as they sold their media assets. So really they dropped down to 9.2 billion from 22 billion. What does that say? They got a lot of dollars going out. They spent $47 billion on buying this spectrum opportunity for them. So in the end, that's what's going on from the five driver perspective. So what are the 2 or 3 main points? Number one, they meet or exceeded guidance. That's a key message. Our strategy is working. Another key message, we deliver strong financial as well as operational results. And I love the slides. They give you a nice little summary slide. Here's what they mean by that. Strong momentum with wireless and Fios growth, expanded leadership and 5G adoption. Media, they closed that, but they also are looking at closing the TracFone acquisition in 4Q of this year. Of course, from an ESG perspective, third round of green bond, path to zero emissions. Financially, obviously, year-over-year updates that were very strong for them. I love those slides because it just gives you a summary of that's a key message. The fact they have a slide means it's going to be a key message for them. Of course, in addition to that, our focus is, this was a key message. Both of these are kind of similar, but it really stood out to me. I remember the days where Verizon was just so differentiated, everybody was knocking on their door. And the message today is not just volume for volume's sake. It's a quote I shared earlier. But it's volume with the right type of volume, right? We want volume that are high value volume growth opportunities. Not only that, what do they mean by that? Driving a high quality net ad. So those ads, it's a high quality net ad. What do they mean by it? Customers that want to step up to take advantage of the latest and greatest technologies, advancements that they have. Of course, that they'll enhance that value for each connection. They're really playing kind of this premium option, strong perspective. Yes, Caleb, on your question, Fios home internet, yep, that's their fiber. Yes, it is fiber. So those are the key messages, this idea of, hey, we're meeting and exceeding, our strategy's working, strong financial and operational performance, and we're going to provide a high quality opportunity for our customers, and we want high quality customers who want to be a part of that. So where do they see themselves going in the future? Here they are, quick summarize, but I'm going to jump to the slide because they had a great slide on this. Priorities, expand 5G leadership. It was part of the second half, but they continue it through the rest of this year and into 2022. Expand 5G leaders, drive adoption, millimeter wave deployment, C-band. Continue to increase the technology that allows it to go faster and faster, and customers will go towards that. Continue to differentiate their customers, that high valued customers, what they're looking for. Scaling to premium experiences. I might be content with 100 megabytes, but man, those that want the higher speed, that ability to run your whole office, your home, off of these high speeds without having to have wire lines in. I mean, that's a great option for some of us. So differentiating their customers. Of course, transform their business, moving away from the media group opportunity and more getting back to their core. Accelerate those 5 vectors we talked about of growth. And the whole overarching kind of priority moving forward positioned us for success with great market momentum and best set of assets. So the goal, growing through those assets, right customers with the right products or service, that premium opportunity. And you can see it in their numbers. Their margins are quite high, about an 18% profit margin, very strong profit margin. So last part of that, and what were the key questions? Here's just a few of them I'll highlight. Number one, competitive. How are they competing within the competitive? In fact, one of the questions was, wait a second, T-Mobile is saying that theirs is faster. And all they said, look, we're not even going to talk about that. We just go to the scientific data, the analytics of certain groups that assess the telecommunications. And we are always number one. And their comment was, and that group is typically last. It's their big, I'll have to look it up. I forgot what the name of the organization is that does that. Talks about how good the networks are. What is your priority and where will you use your cash? That was a big question. Basically, you borrowed a lot, you've got a lot of debt, and so they're number one, they're talking about paying down debt. But wait a second, you got the stable cash. Basically, you built it. Now people are coming, so you're going to start to see an increase in your cash. Where's that going to go and how much is going to come back to investors? Of course, what's going on in the TracFone acquisition? How quickly is that going to come in and start making an impact? Inflation impacts to the business. 5G and Fios expansion was a big kind of question. How big is that rollout and what's that going to look at in the future? Root metrics. Thanks, Chris. Chris must be in telecommunication. That's exactly the one they will off of. And they're number one for like 29 quarters or something like that. Well, folks, that's the tool. So what do I know at this point? I understand kind of the direction. They got a huge rollout and all this new technology, new opportunities. They've got a great strength of their asset base. They're looking for high quality solutions as well as products for their customers. They're looking for high quality customers. And they basically build a lot of things out, or they start to have customers use them and get access to them, which means you're going to start to see some potential growth. Well, the next step of this analysis is to quickly look at their financial performance. So let me walk you through that. This is the tool. It's called the Navigating the Financial. Here's how it works. For those that have been in our class, this will look familiar. The 5 drivers are right here. The key metrics, when we take our class that we walk you through, are right here. But don't worry, if you've never taken our class, here's just the basic key metrics most companies look at. Don't worry if you don't know exactly what they are. There's a great website called Google. We talked about it earlier. Just do a quick search. What are they? But it takes the key metrics and measures, the 5 drivers, as well as the financial statements, put them in one place. How can I assess their performance? So if I want to access cash and cash equivalent, I'm going to walk over to the balance sheet. And with the balance sheet, I'm going to be able to put a number in right here. With this tool, as you do it quarter over quarter or year over year, you'll quickly see, are they improving or are they not? If you want to look at them versus a competitor, you can see how they're doing well versus their competitor, etc. But here's what I want to do. I want to practice using this, and then I'm going to give you the numbers. We don't have time to go through the whole thing, but let's just practice using that. Grab your chat box, and let's go through this together. So I want to get my cash and cash equivalent. Remind me, what statement do I need to go to? Put in the chat box. If I want to get cash and cash equivalent for Verizon, what statement am I going to go to? There you go. Go to that balance sheet. So here it is. I've got the balance sheet. You should be able to see it. I apologize, a little bit small. Now, this is the one I was talking about earlier that kind of had some interesting number. Here's where they were at the end of the year. Here's their number right here. Why did that go down? Well, remember, they just bought a bunch of Spectrum. You see the Spectrum license jump right here. Well, they took some of their cash to help fund that. It's like you got to go buy a house, right? You're making a major investment. You're going to dip into your savings account to do that. So that's where their cash position was. They dropped to $9.9 billion in cash. The next line item I want to look at is that cash flow from operation. Based on my tool, what I'm looking for is cash from operations. What statement do I want to go to? Just a reminder, make sure you're comfortable using it. Jump in the chat box if you would. Absolutely. Go to that cash flow. Again, you don't have it, but I do. So let me advance the slide. Here you go. Here's the cash flow. Cash flow from operating activities for Verizon. It's really right here. Net cash provided by operating activities. Of course, what do they want that to do? Month, quarter, or year? We want that to increase. You actually see a little bit of a decrease, but a lot of it has to do with this. They had a change here. It was actually a pension expense that impacted them. So that's why you see a little bit of dip on that. But other than that, it's strong performance. If you take that, it was about a $4 billion pension impact. And so obviously it would be better without that, but we're not using adjusted numbers. So here's the number, 31,162. Okay, let's do the last ones we'll do, and then we'll wrap this section up. So I want to get my total revenue. What statement am I going to go to? We'll go to our last statement. What statement do I go if I want my profitability metrics? There you go. Thank you, guys. And net income statement, there you go. Income statement. Go to my income statement. I want my revenue, total revenue. Now notice they break it up by wireless or services and then equipment. So 2 different numbers. I'm looking for this number here. 32,915. I got to get my net income. Of course, I'm going to go to that same statement. Put in the chat box. Tell me what the net income, we're doing the quarterly numbers. Net income for Q3 of 2021. What's that number? Put in the chat box just to see if you can see it. Sorry, it might be a little small on your screen. There you go. 6 billion right here, 6,554 million. Folks, that's how the tool works. It's not that complicated. Now, let me do one last one. We actually have to do a calculation. Grab your cell phone. We're talking about Verizon, and we all have cell phones. Here we go. Let's get that margin here. I got to get my net income, but guess what? It's right there. I got to get my total revenue. I don't have to go to any other statement. I just plug those in, put it in the chat box. How much profit margin did they get in Q3 this year, excuse me. For every dollar they brought into the company, how much net profit did they get? Okay, Benjamin's saying 19.9. Anybody want to agree or disagree on that? Going once, going twice. Give me a thumbs up. Yes. There you go, Veronica. Thank you. We got 2 of us. I got the same one. We got 3 of us. 19.9. What does that say? That says for every $100 they brought in revenue, they generated $19.90 of profitability. Now, for those of you who've been through our class, is that considered a high margin, about average margin, or it's a low margin? What would you say? For every $100 company brings in, they bring in $19. Absolutely, it's a high margin. In fact, the S&P 500 typically somewhere around 8 to 12%, somewhere in that range. Of course, COVID hit it a little bit, but this year's been a little better. But still, at 19, 20%, you're very strong. Just to give you kind of a comparison, Apple's usually around 20 to 23%. So Verizon's not too far off. So that's how you use the tool. Now, folks, I don't have time to go through every single one, have us calculate that. You can do it on your own once you get the tool. You can grab Verizon, see if you get the same numbers I have. You can take a picture of the screen. But here's what I've got. I got their equity position, about 22%, return on assets, 1.8, and here's their growth metrics year over year. Well, not only can you do that on a quarter, you can compare quarter over quarter. So here's Q3 last year. You can see cash is down. Cash generation is relatively flat, but revenue is up. Profitability, my margins are up quite a bit. I'm kind of flat on my equity position, but I got a better return on assets. This is just 3 quarters. Of course, you do 4 quarters to get a full return on asset calculation. Of course, last year, this time, we're seeing a lot of decrease in revenue, our profitability metrics. And this year, we're seeing those growth back to normal metrics. Well, not only can you do it on a quarterly basis, you can do it on 9 months, or what we call year to date. So here's the 9 months. Here's their revenue. Here's their margins. Again, growth at these numbers down here versus drops last year. You can also do it against a competitor. Here's AT&T. AT&T generates a lot more in revenue. They got more assets, different assets. They got a whole media part, although they're looking to get out of that as well. But look at margins here versus their margin. So you got a premium opportunity over here versus not as much down here. Of course, then you could also look at any company. For those that were with us last week, this was MetLife, or excuse me, last month, we did MetLife as a company. And MetLife, here's their numbers. So this is insurance company versus telecommunication. In the end, you can use this tool however you want to do it. I highly recommend quarter over quarter or year to date over year to date if it's your company. If you want to look at it from a competitive landscape, you look at your company versus a competitor. How well did we do? That's a great way to look at that. Well, folks, that is the analyze phase. Well, we're to our last phase, apply phase. This idea of apply is so important in this tool. To go through this analysis and not do anything with it, I've really wasted your time. Here at Acumen Learning, as we said, we focus purely on the topic of business financial acumen. And our goal is really to help employees make a difference within their organization. We had the opportunity a few years ago, one of our customers did an assessment on what is the return they're getting for the value of what we provide as we help employees understand how their company makes money, how decisions are made around the money-making process, but most importantly, what they could do to impact that. If you notice here, these are the most common things we got. We had over a 300% return on an investment with our products, but these are the types of things that people benefit by using this information, by listening to a call and doing it every quarter and begin to apply the concepts. Here's the types of things you'll get out of it. 84% improve the performance of the business and the function by doing this. 81% saw that they got an increase in collaboration, working across different functional areas. 77% said they improved upward communication, your ability to articulate with your executives what's going on in the business and how your role can impact that. 77% improved employee engagement, 75% increased business focus, and 84% improved teamwork. For those of you who've been through our program, think of it, what did you benefit? Just put one of these A, B, C, D, or F. What stood out to you? What did you get by going through, understanding how your company makes money and making decisions around the money-making process? Which of these stood out to you? So again, increased business focus, that's a common one. It looks like improved teamwork. Love that, improve upward communication. That's huge, right? Our ability to do that. Folks, that's what business acumen is all about. Now, whether you work with us or not, I'm giving you a tool today that if you take it and you actually use it and get some things you're going to do with it, create that application, that's what we're going for. So let me explain how that works. The last part of the tool is the application. To know and not to do is not to know. You got to do something with it. So the last part of the tool is this. You've got to be able to apply it. The first thing is, what are the new insights you gained as a result of this analysis? And right here's the key of the tool. Based upon what you've learned, what will you do? And then finally, sit down and have a conversation with somebody within your organization. So let me walk you through that. For me, huge kind of key insights. Strong year for both operational, financial, as well as future growth. They are really setting themselves up to play the future of technology. They're really setting themselves up with a millimeter wave, C-band, a 5G, of being able to really use that as a just-in-time technology for your database learning, for communication, etc. Very strong position. This is interesting. I've worked with Verizon for many, many years. And at one point, it was just about they were the best network. Just come, be a part of it. This whole idea of high quality customers is kind of an interesting dynamic I hadn't thought of, and it definitely stood out to me. The divestiture of Verizon Media Group, I was there when they bought. I was working with them when they bought AOL, when they bought Yahoo, when they made some investment in some media groups. And now to see that they're getting back to their core. And by the way, that doesn't necessarily mean it was a failure. Companies make investments. Some of them work, some of them don't work. But in the end, it's good to make the decision now where they want to focus. Still have strong margin at 18% or 20% for the quarter. The 5G rollout, fixed wireless and Fios, that's huge growth opportunities, and then kind of the strength of their position in the market. So what am I going to do? I'm a consultant. I would love this one right here. I've worked with Verizon for many, many years. I'd love to work with them again, to find ways that we can help their teams, different leaders, understand the organization, understand what they're trying to do and make a difference. That's for sure key for me. Obviously, be able to compare this. We have a chance to work with many of their competitors, compare their performance. We also work with some of their suppliers, et cetera. So compare their performance and determine the best market, how they're doing within the market, share this information and findings with my customers, as well as consultants that I work with, et cetera. The last part of this is most important. What are you going to do with this? For me, it's a customer. So I'm going to think about how can I create a better partnership with Verizon? How can I make a better partnership with any of the telecommunication players and be able to use this information to strengthen? But if it's for you and you're looking at your own company, sit down with your manager, have a call to align that. Here's the 3 things I think I should do based upon the call, manager. What do you think? Are we on the same page? You don't want to have this happening where you're focusing on something that's not important to your manager. So the whole goal here is, once you've done this analysis, if it's your company, go share with your manager. Here's the top 3 things I think I should focus on in the next quarter. That's going to build your credibility as well as build your career, as we talked about earlier. Again, the last one is, if you're looking at a competitor benchmark company, how would you use this information? Well, meet with your manager or team to compare your business to the company you analyze, identify actions you and your team can do to create more competitive landscape, be a better performer within your competitive grouping, if that makes sense. Well, folks, that's the tool. Prepare, analyze, and apply. Well, you'll remember the second step of prepare. Do you remember what that was? It was actually to go back and review your notes. Well, this tool, if you complete this on Q3, when they get here in January, when they communicate again, you'll have this ready to do a quick review. Oh, here's what they talked about in Q3. Okay, well, now I'm ready to go. I'm ready to listen to that. So this becomes a resource for you. That's why I say if you do 2 to 3 consecutive, you really start to see the patterns. It really starts to impact your decision making. Well, folks, here's my last question as we get ready to wrap up today. And that question is this. I can put in it's a poll question. So who are you going to analyze? Boy, you've listened to this. If you say, I'm not doing anything, I've wasted your time. So here's my question. Who are you going to analyze? A company you work for, sell to, compete against, partner with, invest in, or interested in. Or next month in January, we're looking at Ford. You may say, I'm going to prepare for Ford because I want to jump on this again and see what Brent has to say about Ford. That's a great way to kind of capture that information there. Folks, that's the goal. Take this information. So as we wrap up today, here's where you can access that tool. Go to acumenlearning.com/webinar. Ginger will put in the chat box. There you can access the workbook. As well, you can sign up for the January 26th where we're going to look at Ford. In addition to that, I'm giving you $100 off on our Seeing the Big Picture online self-paced learning program. If you've never done anything around this, you want to get a quick understanding of this, it's 13 modules, self-paced, very interactive. The goal is to help you understand the 5 drivers as well as how to think about financial statements. If it's been a while since you looked through it, you want a refresher, that's also, I'll give you $100 off. There's a code if you go to acumenlearning.com to do that. In addition, if you're saying, Brent, this is interesting, I want to do this with my team, the same place you can reach out to us, and one of our great sales leaders will reach out and follow up with you. Our goal is to help to move the needle. With that being said, it's been my pleasure to spend some time with you. Thank you very much for your time. Take this tool and use it. It truly, my guarantee, it will build your credibility, it'll build your career, and it'll build your company. Thank you for your time. I'm happy to stay on and answer any additional question. If not, once you get access to that tool, you're free to go. Have a great day and happy holidays. Last one for the year. Be safe. Thank you as well for joining us, Samuel. Abdel Carter, apologize if I pronounced that right, but thank you for joining us. Benjamin, Caleb. Thank you, everybody, for joining us. So C-band, what is that? Is that the question? C-band? C-band's a technology. It's actually, I think it's some hardware as well, allows them to do more data at a faster speed, is my understanding of it. There's all sorts of, you think about spectrum, you've got 4G technology, millimeter wave, C-band. I would not say, Caleb, I'm an expert on it. What I understand based upon what they've communicated, it helps in these mobile cities. It helps to handle more information at a faster speed. Thank you, Alicia. Great to have you there. Oh, it's so kind. Thank you. Again, Ginger put in there the chat box. Make sure you access that acumenlearning.com webinar. Please feel free to invite anybody else to join us. It's a great way for people to get introduced to this concept of how to listen to an earnings call and be able to use it in my daily routine. There you go, Caleb. There's a more eloquent way to describe it. Band of satellite frequencies for transmission. Well, folks, I'm not getting many questions in the chat box, and there's just a few of us left. Again, just go ahead and exit the meeting when you're done. Make sure you've accessed the acumenlearning.com/webinar where you can access the tool, as well as sign up for the next one. We're going to look at Ford Motors, as well as get access to the webinar. One of our great colleagues that's sitting right next to me, her name is Brooklyn the Extraordinaire, Brooklyn Parks the Extraordinaire. She's the one who built this background. Well, folks, we are about there. We're going to go ahead and I'm not seeing any additional questions. Thank you so much for joining us this year. Happy holidays, and look forward to 2022. We're going to start off the year. It's the 25th of January. So put on your calendar where we'll look at Ford Motors, see what's going on in the manufacturing automotive industry. With that being said, Ginger, let's go ahead and shut it down. Thank you, folks.